What's up, everybody? Good morning. Oh, hello. Hello, market moving quick. How y'all doing today? Smash that like button. Let's get started. Give some love on the algo. Grab overnights from last night. 38. Monthly was 53.13.25. All right, let's get that. Oh, interesting. Okay. Bear long down. Wow, that's interesting. That's like a mean reversion as well. Let's play around for a little bit.
Apple Cash is an easy, convenient, and secure way.
Bear long down is not a bullish shut up at all. Let's see what that does. Resilience is still positive. Things are looking pretty interesting here. But yeah, I don't know. This is not a breakout to me for today. This is a very difficult one to trade. Yeah, once you keep bumping into the middle, and look right here, when you jump into the middle, it flips around. It's not updating like as it flips, it's updating the picture. So it's like where you are right now. Like right now, when you open bear long down, the resistance is down. So like that's why when it opened, it's like sitting like right here and trying to pull down. This could be a sell-off day. This is not a bull sun up today, and this is monthly expiration as well. So anything can happen today. Any long pressure would be off of monthly, but still the thing is that watch monthly resiliences are negative. So when we get there, it's likely not going to stay. Look at this, -30, -13, the monthly. So this is the yellow one, and today is monthly expiration. The yellow number indicates what the stocks are doing around their own monthly hedge pressure. So today, the stocks themselves are fighting to hold their own monthlies. Let's go ahead and search for monthly hedge breakdowns right here. So using the scanner, you guys can do this MHP breakdown. Pick it. We'll see if there's any. No stocks have broken hedge pressure monthly yet. Okay. Below monthly hedge pressure. You can see which ones are just below in general. Wait a minute. Doesn't look right. Maybe not all the calculations are done. Above monthly hedge pressure, there's only 10. Below monthly hedge pressure, there's 5. Okay, that's not. Maybe not all the liquidity maps are done yet. Let's check this really quick. Why is the scanner not picking up all the conditions? 47. Okay, there they are. 49. Okay. It's just a delay to get them. They were not done being calculated. I think the scanner is not. That's what it is. The scanner just took a little bit of time to start querying that server. All right. So now that's something to take note of. future updates. The scanner is about like a maybe like 10-20 seconds after they were calculated, then it finally grabbed all that data. Okay, about half of them are below. Which of them are above? Okay. MHP breakdown. Let's see which ones are going to be losing today. We're going to search for distance from monthly hedge pressure right here. Just to see which ones are right on the edge as they fall. Searching by volume, or filtering by volume. Microsoft, Amazon, Nike, Pepsi, those are all big in the NASDAQ. Okay, big NASDAQ stocks losing. Pepsi's NASDAQ. Pepsi's breaking MHP downside. Amazon, fighting. Soft. Looks like a VIX today. And while we're doing that, let's split up monthly maps on the monthly, just to kind of get an eye on SPY. What we're gonna be doing. So VIX has actually bullish tendencies from here. Above monthly hedge pressure. This is setup number 2 now. The VIX could trade down to here and bounce over there. So the upside could possibly be limited. Now again, the bigger picture is definitely bull market right here. You can see both of them are slipping down. Bull market, DD greater than half. Trading above monthly hedge pressure, so we have the greater bull market still being a thing. The S&P resiliences and monthlies are starting to recover, so we're starting to see a little bit. Those yellow lines are going to likely try to support now. I definitely want to get an entry off of monthly hedge pressure. That's the only thing I want to do. Okay, we're looking for the stocks below MHP now. To see, make sure that we're not getting a big flux of them in and out. Problem with today is that we always know the bear zone top. There's always some kind of resistance there. Remember, we always know that there's a 75% chance under all conditions that you end up down in here. 25%, you close up there. The 75, so the market's going to want to stay inside of here, but the other side of the coin is going to want to float there as long as monthly res is greater than 0, which it is. So we have a range to trade in today. It's a very small range. It's very tight. That's the one issue on S&P. Now QQQ is a little bit different. But similar enough. It did open in this mean reverting area, so QQQ is likely to stay inside of here. Again, 75% of the time. poor if MRES greater than 0. So in Qs, there's scooping up inside of the bottom area there. At least scalping inside of here to go. This is monthly expiration, so MRES is the most important today. Monthly hedge first, the most important day, becomes actionable on expiration day usually, because the rest of the month is usually far enough away that you don't normally see it. Fucking tornado came by my house last night. Well, things, if y'all saw my Instagram story and my Twitter post. In a similar area. I didn't get hit by a tornado, but it came by, like not far. Like it was just like little tiny little swirls. 90-something hour winds. In my recycle bin, like across the street in the neighbor's backyard. Just see that picture of that rain? Jesus Saves lives not far from me. And so had the same, we were like texting each other videos. Like, check out my yard. Oh, check out my stuff. It was crazy. It was crazy. Like I was upstairs. You know, you got this on your phone, your channel warning, severe weather warning. We were supposed to go to an event last night, this private party for my friend owns a bunch of emergency clinics, like what do you call them? Like those, you know, those rapid emergency care clinics. It was like 40 or 50 of them. And so his company putting this huge private event on. We were gonna go. We were like in the process of getting ready. We just got invited to it. It's for like doctors and stuff in the industry. So like, yeah, we're getting ready, and then we're like, oh, severe thunderstorm warning. And I was like, oh, it's probably gonna just blow away. And all of a sudden we're upstairs and the house starts shaking. like the monitors and the monitor arms were shaking like visibly on the video. I think about video I posted in the Discord. Shows that the monitor arms are just flopping around. And they were like, okay, let's go downstairs and get in the door frame of your office. Ever seen that? The power's flicking on and off, and the wind is just howling so crazy. Okay, look, we're at MHP now, and the question is, do I want to take a stab at it? It is right on the edge, and it was fighting to lose. So if there is a long place, it's here. But the problem is that it's only there's only 4 points of travel here, so the reward and risk is not really worth it to me. Take a long. Honestly think that with NASDAQ as well, monthly res is below 0. NASDAQ drops even further, we're likely to break monthly res today. So my call today is that this is not a long setup to buy from. Hey, you need to meet that guy, bro. You need to take me to get crawfish one day. We live in like crawfish central over here in our neck of the woods. You work with the largest health system in the US. Saw rebuild your garden. Great job. Thanks, man. Dude, it was crazy though. And like I opened the door and it was just, I mean, I've lived through hurricanes, so I've seen powerful winds. So it reminded me of Hurricane Ike, and like the winds are like, they were saying 90 miles an hour, and we were in the epicenter of it. Windows were like being ripped out of buildings downtown, like large sheet glass windows were just falling from skyscrapers. There's pictures of them and landing on like landing on the ground below. Luckily nobody downtown was hurt. I think 4 people total in the city were killed, like which was really tragic. But like downtown, imagine a window falling from a skyscraper, just falling hundreds of feet and smashing the concrete. So there's pictures floating around the internet today of that. And it just came out of nowhere. Signs of the end times, maybe? Or signs of the sun shifting its magnetic poles from north to south like it does every 11 years. Creates weird weather patterns. Those of you that have been seeing the Aurora Borealis up in Utah, And this is the other part of that. Just get weird fucking weather when the sun does stuff. Happens. Part of being part of the solar system. Let me see if I can find pictures of that. Eastern storm. Oh, here's the pictures. I know you guys. So I'm no trades today. It's gonna hit monthly hedge first. This might break. It's not a sell off, not a crash day. It's not a good long entry from here. Look at this. From like skyscraper buildings, see the windows just ripping out, just falling. And then here, just like that. Oh, what do I think of oil? Let's check it real quick. So MHP breaks are no fun. It's right on the edge. The only reason I don't see a long entry here for me is because we have resistance at 529. It's only 4 points away. The reward is really small, so we're trapped in this like tiny little area, and it's going to take a little bit. And we're at all-time highs now. It's just going to take a little bit for me to see it move, and there's no momentum for it to move. Does everyone see that? Even Nasdaq is stuck in a mean reverting area. So there is no potential setup right now. Crude oil's just been floating around 80 bucks, you know, for a little bit over a year, you know, flying up, flying down. I really honestly think that crude oil and any other commodity trade, from my experience with it, unless there's a kind of a geopolitical event for things to start moving really rapidly, crude oil adjusted for inflation over a 100-year period, average price is roughly 35-40 bucks. So oil at current price, $80, is an inflated price based on inflation. The reason commodities inflate to the cost of the dollar going or changing is an inflation related phenomenon, not an oil related phenomenon. People stockpile tangible things in periods of inflation because the tangible things can be traded to other countries with currencies that may or may not be so inflated. So people tend to put their money into commodities, especially things like oil, energy, right? Which is something that everyone needs regardless of the state of inflation. It's something that if you had to choose between a luxurious item and pay your electricity bills, you're going to pay your electricity bills or pay your gas to get to work and things like that. So these things tend to just rally up and down with inflation. Apart from like rallies that we had in 2020, post-COVID 2021, Russia, Ukraine created some bump. I think oil is destined to slowly return to the $50 range as this bull market continues to move. As people become feeling safer and safer in equities and inflation starts to slowly pull back, so will oil, unless there is some kind of reason for the OPEX or the NOPEX or the BRICS or anyone out there deciding to choke the oil supply to artificially inflate it. I think that right now that's not a mechanism that we're going to see. So, I really think oil, like anything else, is not a momentum play at this point in time because inflation is certainly under control and there's no mechanisms to create further inflation right now. There's credits, there's no like massive credit cycle. It's hard to get credit right now, so it's not like people going on major spending sprees to drive prices up. As the employment data shows, there's people that are getting their jobs back right now after being unemployed for a long period of time, which means that wages are coming down. That's always that relationship that you look between JOLTS and the continuing jobless claims. So if inflation's coming down and oil's coming down, and ever since inflation's been in check, oil's been in check. There's WTI crude, but from the post-COVID 130, 120, and ever since then, it's just been coming down. It might have its bumps. Like I said, Russia, Ukraine creates some issues with potential supply chain stuff, or supply chain supply. Right, oil is different in the what I like to call the post OPEC world. Up until the early 2000s, I started as an oil trader, by the way. The early 2000s, up until then, OPEC had like a monopoly on oil prices, and the Saudi Arabian, authorities pretty much ruled, well, they still do, rule OPEC, and it's a cluster of producing countries, but like the Saudis are the kind of the leaders, if you may. They kind of set the pace for everyone else. And we lifted our export ban in 2014 or 2015, whatever it was, and Russia started producing more. And OPEC was around more. These days I don't follow it as much, but I think it's roughly like 1/3 of the total production. Used to be a lot more. So now that a lot of other players have entered the scene, the monopoly of OPEC is not as strong as it used to be. It's like these OPEC reports that come out like a long time ago. I used to glue myself to them. 3 or 4 in the morning when they'd come out, whenever it was. If they'd cut production, 2 million barrels, oil would fly and rally in the 2010 2014 range era oil. But nowadays, it's not as big of a thing. Oil's harder to correlate now than it ever was before because there's so many different players on the scene. It used to be, it's kind of like when we watched the stock market for Jay Powell to say something. Back then, you would listen to anything related to the Saudis and what they would want to do, and any hints, them raising production, lowering production. It's just like any hints of Powell raising, lowering rates. It was so easy to follow. It's so easy to trade the S&P around interest rates right now because the world's basically looking at us. There's one data point that we look at. So these days, it's a lot harder to trade oil. Is all I'm trying to say at this speech. Is a lot harder to trade oil because there's so many different players, and it stabilizes much faster. So you don't get like these mega rallies anymore off of production cuts, and oil markets don't crash when supply is going up as much as they used to because other countries adapt, and there's so much oil out there. And then now there's so much American infrastructure to process high break-even point shale gas that rigs can turn on anytime oil prices get really expensive. These rigs can turn on and process oil anywhere upwards of 120, 130 break even. So we have the production capabilities to continue to produce the crappiest, cheapest oil, and oil prices go up, which floods the market, brings oil prices down. So there's a self-governing mechanism now, because during the 2013, 2014 boom, when the shale gas thing was hot, we built all this infrastructure that now sits dormant because at $80, like back in region, shale rigs don't make any money because it costs $130 to break even in some of these places. And so oil ever gets that high again, those production units turn on and they start producing oil to flood the market and prices come down. Before we had all the infrastructure, there's no real way to bring prices down because we couldn't flood the market, and the Saudis could, and they would just control the pricing. Now America can flood the market and bring prices down. So oil is now this really awesome self-regulating thing that I don't think over the course of the next decade or two is ever going to break $100. Let me just start over by saying that. Unless there's a period of high inflation, oil is coming down slowly, probably for the rest of our lives from here. That's just my thought. Unless there's a war, let me start over. Geopolitical event like a war, an oil producing country, a major war where 2 oil producing countries are fighting each other, 2 large wars, not like the Russian-Ukraine situation, is not enough, I think, to make oil really substantially move. Russia's just, very small part of the overall production. They're like less than 10% or around there. But like 2 major conflicts, 2 oil producing countries in the Middle East, or America gets involved with one of the larger countries that are producing, America, China, America, Russia. These things would affect oil prices big. Other than that, I don't see any mechanism for it to rally. All mechanisms I understand about oil from my years of trading it is that oil is definitely going to fluctuate in this area and just drift lower while the stock market goes higher. And that's what you normally see in high inflationary environments. If people build their trust back in the stock market, most people start to put their money into growth rather than to stability. And so stability is to hoard a commodity, whenever there's inflation. The commodity will inflate with inflation, and therefore your money is not losing its value. That's all I think about. Oil pricing, gold cuts through the currency noise. Thanks, Matt. Love hearing your thoughts. No problem. Yeah, let's see like the oil chart here. Little history of oil. So there's nothing going on. We're sitting out on the S&P today. So I've got nothing to trade right now. History. A little history of oil. There's your Desert Storm oil rally. This is your oil kind of tethered when all things went up in 99 leading up into the first recession, the tech crash, internet.com bubble. There's the second oil rally as oil surged right before we collapsed in the 08-09 incident. This mechanism was fueled by two wars, two large wars between producing countries. We had the United States had two campaigns in the Middle East, right? And then you had the surge of the stock market at the same time. Everything was moving, and this was moving at triple pace because of the two wars. And then that collapsed out. And then what happened here is that it slowly just retraced to kind of middle of the area. Right about 2014, 2015, rumors of the United States Obama was going to lift the export ban, and China was industrializing rapidly in the 2010s and was becoming a big customer of oil products. The Saudi Arabian government, being the masterful oil traders they are, the best oil traders on the planet, are the Saudis. They know how to do this game better than anybody. They decided to flood the market with oil supply to kick America out because America's shale was producing, and they were convincing Chinese companies to create the infrastructure and plants to process really dirty, really nasty shale crude. And China was like, sure, sell it to us for cheap. We'll do it. Well, with oil prices this high, America could enter the market and lift the export ban and sell to the Chinese. And the Saudis are like, no way, let's kick America out by flooding the market with oil. Therefore, their production can't break even. They can't make any profit. And that was a very awesome power play of the Saudis. Crashed the oil prices because of that. Oil stayed low for a while. America's shale industry was completely clobbered. And then the OPECs got the business. We just retraced that sell-off into the Trump era rally of the stock market. And then, of course, we tried to reset the $60 and just hung there for a couple years. There was that big event where oil crashed to negative $40 in April of 2019. That was when the carry cost of oil was more than the cost of the barrel of oil itself, and there was a big power play, and there's a whole thing on that, and people shorted oil futures to being negative. That had to do with the available production capacity versus the supply, the storage capabilities. It was on expiration day of that contract that happened. But ever since then, nothing really, wherever that day was. It was in April of 2018, I believe. And then you had COVID, collapsed everything, and then we rallied back up post-COVID. This was inflation that caused oil to go up to the post-$100 range, which is the only thing these days, minus, big wars between producing countries that make oil would go above $100. Is the only thing that'll ever take it there ever again for the rest of your life. And then now oil's just slowly, gracefully making its way back down to $50. There you go. Two wars. As Andrew says, Always Sunny fans out there. America is at war. Let's talk about the war. Actually, Dennis, we're in two wars. Two wars. Boing. If you watch Always Sunny, me, Andrew, and I always quit in that show. Trading ASMR. You were long U.S. oil that day at 4. Rip. God. Oof. That was just terrible. That day was crazy. It was just that one contract too. None of the other contracts are negative. I think it's just whatever the April contract was that went negative. See, there's that hedge pressure bounce that we always look for. but we're stuck in that range. So there really is nothing. You'll see how using Rocket Scooter, like I'm literally using this as risk management. I'm not touching it. I'm not trading it. We're kind of stuck in the middle. Right now it's a gamble. If I try to do anything, it's just a coin flip. Monthly hedge resilience is strong enough now to support it, the orange line. But we still have that bear zone resistance, so it's kind of hard to make a determination from here. There is that monthly hedge balance that we look for. I just want to take it. So typically, if any, back in the day when OPEC could pretty much set oil prices, everyone had to just deal with it. If they raised production and they flooded the market and crashed the oil prices, we dealt with it. If they starved the oil supply, prices went up, we dealt with it. Now, if they starve the oil supply, there are so many other countries out there that will make up for it. They have the capacity to do so. So the Saudis don't typically have the desire to shoot themselves in the foot anymore to control the market, because they can't control the market anymore. OPEC is like I said, roughly like a third or so of production. No. So oil doesn't have like these big nasty catalysts anymore from just the little bits of production changes. Like I remember in 2014, 15, during that era when oil collapsed, we stayed glued to those OPEC reports for the first hint of a supply cut. And the first time they cut rates, it was like 1 million barrels or less, which is very small. And the market rallied, I think, for like a month or two. It was like the biggest news, like oil finally production cuts. Oil fell like 26 bucks, I think was the lowest it ever was at that time. And I think it rallied like the 40s after that. Remember correctly, 26 bucks was the low. Let's see how good my memory is. $26.05. Holla. Look at that. Papa Bear remembers, and then it rallied to the 40s. The production cuts. I think this was the first production cut announcement, actually, this one right here. So these days, you can just consider a lot of commodities and energy are going to be inversely proportional to inflation. High inflationary environments, you're going to want to long commodities like oil as inflation's going up. As people are leaving the stock market, they're going to put money into not fixed income, because inflation is toxic for fixed income trades. So people tend to, and cash is also toxic. People tend to find these days safety into depressed commodity assets like oil, which tends to be worth less during times of low inflation. So a lot of times when stock market's really high and inflation's really high, people start selling and then shifting to commodities. We've been seeing that trend a lot lately as traders. So now you can see as the stock market's continuing to rally higher, oil's been continuing to rally lower. And that's or sell lower. And that's just their typical money movement from one thing to the other. Nothing mechanical with oil itself. It's less of an attractive place. You know, it's not as much inflation. High asset prices, like in commodities, due to inflation, are just kind of like places to park your money. Whereas interest rates on fixed income can outpace inflation sometimes. So then people will go to commodities. This is a tangible thing. You own it, you can store it, you can sell it when prices are higher. That a lot. Comes the bear zone top. Yeah, that was the scalp I was thinking about taking, but 5 points just wasn't worth it to me. So that little trade right there is the only predictable thing today that I can see. The one we just saw. Y'all see that right here? From here to here, from here to here, that's the only predictable part of the day. Everything else is going to be particularly random. So I waited. When that tapped, I could have taken a long to there, but it's just not worth touching. It's a very small move from here to here. Yeah. You took that NQ bounce of NQ top to bear zone, did it on combine though. Nailed it. You guys are incredible. Love it. Okay, I got some work to do today. There's that pullback. See how easy that is? Sit out on that. Excuse me. And then now the random shit's gonna happen. So, what do you hear? All right, that's pretty much it for today. With option expiration, typically expect choppiness. Yes, typically expect monthly hedge pressure interaction. The result of monthly hedge pressure resilience tends to predict the likely course of expiration mechanic. It being so strongly above zero is not likely to experience a market collapse or sell-off from here. It's more likely to close above here than it is over there. And that's basically all that's all we can do monthly is just use a liquidity map, MHP resilience. Yep. Okay guys, love y'all. That's it for today. No trades. Gonna sit out on this one. Nothing from here to determine. we will see y'all on Monday. Marketplace launch. All new stream format, everything. So we will see y'all later. Okay. Enjoy your day, everybody. Y'all have a good one. Love you guys. Bye.